In recent years, the cinema world has been impacted by major changes. Reasons ranging from pandemics, competition from streaming, and the multiplication of productions from other countries have been keeping many people in Hollywood up at night. Awards such as the Oscars, which once dominated conversations about films, now stand out more for their controversies than their accolades. It has become increasingly evident that major studios are becoming disconnected from the general public. And of course, Hollywood productions have been losing their shine. Amid this creativity crisis, the words of one of the greatest film directors of all time, filmmaker Steven Spielberg, directed at Tom Cruise, caught everyone's attention. "You saved Hollywood, and you might have saved theatrical distribution." Seriously, Top Gun: Maverick might have saved the entire theatrical industry. The production of Top Gun: Maverick, led by Cruise, generated revenue of over $1.5 billion, making it the second highest grossing film of the year and one of the biggest audiences on streaming platforms. It is undeniable that the film was a success. In a project like this, with the potential to save an entire industry, there are a number of companies involved. One of these companies is listed on the stock exchange at accessible values to you. In other words, you can be a shareholder of the main company that is making money from the success that could be saving Hollywood. So come with me and let's see which company it is and understand how they are making money. Welcome to Stonk Pickers. Guys, we are a channel that is just getting started, therefore, every subscription and every like matters a lot to us. That being said, let's get down to business. Spielberg's words shed light on something bigger that has been happening in Hollywood in recent years. What happens when the customer doesn't want the product you offer? The obvious: there are no sales. In recent years, a series of failed productions have caused massive losses for the film industry. Since 2020, 22 films have resulted in losses of nearly $2.5 billion. To make matters worse, this problem is not limited to just these 22 productions. To give an idea of how abnormal this is, half of the top 100 productions with the highest losses, adjusted by inflation, were made in the last 10 years. But the impact is not just limited to productions. From 2018 to 2022, the combination of these failed productions and government-imposed restrictions on circulation resulted in a nearly 50% reduction in the number of tickets sold to cinemas. This chain reaction was deeply felt by cinema chains. Giants like Cinemark, AMC, and Regal were on the brink of collapse. Cineworld, on the other hand, couldn't survive and filed for Chapter 11. More recently, the same type of movement was also felt in the streaming market. With people confined to their homes, an obvious entertainment option was streaming. This market benefited from the restrictions. But now, with the end of restrictions, Netflix, the main name in the segment, is already beginning to feel the effect of subscription losses. Another case, however, of a company present in both markets, Disney, has also stood out. With the deterioration of its results, the company was forced to take drastic measures. In November 2022, the company announced the replacement of its CEO. 3 months after that change, the company announced a cut of more than 7,000 jobs. In such an adverse scenario, seeing a successful production emerge that rescues the desire to go to the cinema seems like an oasis in the desert. Top Gun: Maverick, a film heavily criticized by Hollywood experts, but loved by the general public. It may have been the main factor in shining a spotlight on one of the world's largest film producers for this Hollywood crisis. After the success of the film, the producer explained its financial results, mentioning the Top Gun film 8 times on its 5 pages. The company did not provide guidance on its future productions, but that wasn't even necessary. This film shook the company. But before we continue, please like this video and subscribe to our channel. We are not monetized yet, so we need your help to continue producing valuable content for you. So, getting to what matters to us who like to make money with stocks in the stock market. The production of this success had as its main responsible parties Cruise, Wagner Productions, a company controlled by Tom Cruise and his partner Paula Wagner, and the Paramount Group, a cinema giant listed on the New York Stock Exchange under the ticker PGRE and on Nasdaq under the ticker PRA. The Paramount Group, a publicly traded company, has a slightly different ownership control structure than what we usually see. It is a corporation. This is considered the best ownership structure from the perspective of the minority shareholder, that is, for us who can buy stocks in the stock market. This is because the company has legal responsibility as an individual, separate from its shareholders. That is, in this way, it can hire people and services and assume responsibilities for its commitments without exposing its shareholders to the risks of being held responsible for the company's decisions. Another important and less talked about point is that it does not have a defined controller. Thus, strategic decisions about the company's investments, dividend payments, and election of members of the board of directors are made by the sum of votes from various institutional and individual shareholders. This brings greater alignment between the interests of the business and those of the minority shareholders. Furthermore, since there is no direct control, there is no single person capable of inducing the business to manage it more favorably towards their interests than other shareholders. Furthermore, the company has among its largest shareholders none other than Warren Buffett, the Oracle of Omaha. Buffett is widely known for his value investing approach to investments, having generated an average annual return of nearly 20% over the last 53 years. In summary, his approach consists of buying stocks of companies with great potential for appreciation over time, selling them on rare occasions. Therefore, having someone as a partner focused on generating value for the business is a positive point. Looking at the finances of the Paramount Group. Paramount is a conglomerate of businesses distributed across three segments: TV media, direct-to-consumer, and filmed entertainment. Taking into account its latest numbers released in February 2023, the company's main source of revenue comes from the TV media segment, responsible for over 70% of the group's total revenue. The TV media segment is what we know for broadcasting content on free-to-air television, specifically through the channels CBS Television Network and CBS stations. This segment is also responsible for cable television content and broadcasting, primarily through channels such as Paramount Media Networks, Nickelodeon, Bet Media Group, and CBS Sports Network. Despite successes such as the series Yellowstone and Fire Country, this revenue source has remained stagnant in the last year. Moreover, the company has been dedicating its efforts to transforming its business into what it believes is the new secular media trend. What the company understands is the transmission of content on a multi-platform network. In this sense, Paramount has been investing in the direct-to-consumer segment, which has been one of its fastest-growing revenue streams. But what exactly is this segment? The direct-to-consumer segment corresponds to the portfolio of streaming content and services. In the case of the Paramount Group, it includes the brands Paramount Plus, Pluto TV, Showtime Networks, Bet Plus, and Noggin. In the last year, the direct-to-consumer business was responsible for a 30% revenue growth. This was due to an increase in their customer base by more than 77 million new subscribers worldwide. During this period, the productions of Top Gun, Maverick, and Yellowstone were the main attractions for new subscribers. With this boost in subscriptions, the company gained market share at levels higher than expected by everyone, leading their strategy to a new phase. During a conference call with investors, the company mentioned two important things. The first was that in this market, content is king. I may be optimistic, but a quote like this, after several mentions of the success of the movie Top Gun, Maverick in their report, may indicate that someone in Hollywood, or in Omaha, has realized the trap that this market had fallen into. The second important thing was that with the current customer base in direct-to-consumer services, it is now possible to increase the prices of the services offered and focus on the profitability of the business. This could be a new milestone for their stocks. Paramount stocks have been trading at significantly discounted values after a series of declines in recent years. A new phase of profitability could bring momentum to these heavily discounted stocks. This could be an opportunity to do what a certain Oracle always sought to do in his investments: buy dollars at the price of cents. So, we return to the question for you. Do you think these initiatives by Paramount will be enough to increase the value of its stocks? Or do you not believe that the company has realized that it should focus on content that consumers really want? Or are you even more pessimistic and believe that what we are seeing in the segment is just the beginning of a deeper change, and that all major producers should downsize to adapt to the new reality? Answer here in the comments, and don't forget to like and share our content.
The end is inevitable, Maverick. Your kind is headed for extinction.
Maybe so, sir.